Stocks, shares, and markets. Bear market. A time when prices in the stock market fall by 20% or more and investors feel worried or pessimistic. During the bear market, many investors lost confidence and sold off their shares. Blue chip. A well-established, financially strong company with a long record of reliability. Investors often turn to blue chip stocks during uncertain times because of their stability. Bonds. A type of loan that investors give to governments or companies. In return, they receive regular interest payments and get their money back at a set future date. She invested in government bonds to earn steady interest with low risk. Bull market. A period when prices in the stock market go up and most investors feel confident and optimistic. We are currently in a bull market, with share prices reaching all-time highs. Correction. A short-term drop in stock prices, around 10%, after a period of strong growth. Some traders expected a correction after tech stocks rose too quickly. Debentures. A type of loan that a company takes from investors. The company agrees to pay back the money with interest, but without using any specific asset as security. The company raised capital by issuing debentures instead of taking a bank loan. Derivatives. Financial contracts whose value comes from the price of something else, like a stock, bond, currency, or commodity. Common derivatives include futures, options, and forwards. Derivatives can be risky for inexperienced investors because of their complexity. Dividends. Payments a company gives to its shareholders, often as a reward for owning shares. The company announced a dividend of 50 cents per share for this quarter. Equity. Ownership in a company, usually through owning shares or stock. When you buy shares, you gain equity in the company. Futures. Contracts to buy or sell an asset at a set price on a specific date in the future. The trader bought gold futures expecting prices to rise next month. Index. A measure that shows how a group of stocks or assets is performing overall. The S&P 500 is a popular index that tracks 500 large US companies. Issue. To make new stock, shares, and bonds available for investors to buy. The startup plans to issue 1 million new shares next quarter. List. Officially include a company's shares on a stock exchange so they can be bought and sold. Only companies that meet strict financial standards can be listed on the London Stock Exchange. Rally. A rally is a period when stock prices rise quickly after falling or stagnating. The recent rally helped the market recover losses from earlier in the month. Sell off. When many investors quickly sell their stocks or other assets, causing prices to drop. During the sell-off, many investors panicked and sold their shares at a loss. Share capital. The total money a company has raised by selling shares to shareholders. The company increased its share capital by issuing new shares to the public. Shareholder. A person or organization that owns shares in a company. She became a shareholder after buying 500 shares in the company. Stake. The part of a company that someone owns, usually shown as a percentage of shares. He bought a 10% stake in the company to become a part owner. Volatility. The amount of change in the price of a stock or market, especially how quickly or unpredictably prices move. Market volatility increased after the central bank's unexpected interest rate announcement. Yield. The income you earn from an investment, usually shown as a percentage of its cost or current value. The bond offers a yield of 5% per year.